He's called Kaisha Godwills, and he's my colleague from group. And I'll just let him maybe 2 minutes to just tell us about the group, just to give us a picture of the group structure, and then I'll talk about EFKen specifically. Is that okay?
Thank you very much, and thank you, Kaisha, having you on board. Good morning.
Thank you. Morning. Thank you very much. As JudyAnne mentioned, I work for EF Africa Group. Just as a brief of the group office. So the group office is its only company. We're based out of Mauritius. However, we have 2 subsidiaries, which is EFKen Leasing, which is in Kenya, which was established in September 2020. However, we also have EFTA, which is a much more mature business, has been in the business for the last 17 years, offering financial lease to players within the agriculture space. Just as a brief in terms of our shareholding, so our major shareholder at the group level is KFW, and then we have a DevCo, we have a small foundation, MIDA, which basically form a bulk of the shareholding within the group. So we do also have ambitions to open up in other markets across Africa, currently Kenya and Tanzania, and basically looking for Zambia. Probably in the next financial year, we should also have the presence in Zambia. So thank you very much, and just a brief introduction for the group. Thanks.
Thank you so much for this, and hopefully we'll be able to continue the conversations soon again. Now, JudyAnne, I can see you put your presentation on, and perhaps I could ask you just to make it full screen, so we got the full overview of your presentation. Thank you.
Okay, just give me a minute. I do that. You can help. All right. Okay. Sorry about that. So yeah, so the presentation, I'll make it quite brief. It's actually a brief presentation. So Kaisha has gone through the group structure, so I'll not go back to that. But just to mention that EFTA has been in Kenya, in Tanzania, offering financial leases for about 16 years now. So it's our bigger brother. EFKen was set up in the year 2020, and I was involved in the setting up of the company here in Kenya. EFTA as a company looks at different industries. So there's agriculture, that's the main industry, but also looks at other sectors like tourism, manufacturing, and different other logistics and other sectors. But for EFKen, our main mandate from the shareholders, and I would say specifically KFW, is that they've given us a mandate to empower the SMEs, especially in the agriculture sector, because the main agenda for setting up of EFKen is really to promote food security in the country, which is a very big challenge that we are having in the country at the moment. And I think it's actually an African problem, if not a global issue in many parts of the developing world. So by doing that, food security, then we have to finance the agriculture sector. And what we do is equipment financing. The kind of financing is specifically to equipment. So we provide equipment financing that will help to promote mechanization. And I'll go through the type of equipment that we finance. But before that, I'd just like to go to the next slide, which is, these are mostly some of the things that you already know, that why we are addressing the food security issues is because of the poverty levels. They are very high. This is data from World Bank. And the fact that SME is really critical. There are very many SMEs, and the SMEs are the ones that drive this economy. So the focus on SMEs is very important. And what we've seen, or what the group has seen for them to set up in Kenya, is that the SMEs are not able to access financing. Specifically, I would say, again, I'll just address Kenya. So SMEs have a lot of challenges getting financing, and it's even worse for the SMEs in the agriculture sector. So what we are doing is to try and address some of those challenges that SMEs are facing and the agriculture sector is facing, that is making them or have challenges in accessing financing from the traditional financiers, the financial institutions. And some of those challenges are actually, the key one is collateral. So most of the banks in this region are looking at land and building. That's a security that the collateral that they ask for when they want to finance any financing actually, but especially in the agriculture space, because it is considered a very risky market. So the SMEs or the smallholder farmers in this region and the small companies do not have this. Like the farmers mostly are on family land, so they are not able to provide that as securities. Others are on leased land, so they cannot provide that as security. So as much as they would like to grow or to mechanize, they have those challenges. So what EFKen does is to take that particular asset that we have financed as security. And it is possible for banks to do the same when it's assets that have, can be registered, like a vehicle or a tractor. It's very easy for a bank to do that because they just take that as collateral, and then have it registered in their name. But if it comes to things like harvesters and balers and dairy equipment, so that they will need additional security. So what EFKen does is that whatever we finance, if it's a dairy equipment, a processing plant, that is actually what we take as security. And even we don't even take a debenture because it's still an expense to the farmer. So we just register it, or to the SMEs. So we just register it in our name, and then now extend the credit or extend the financing. The other one is just the complex financing application processes. So we've tried to really bring down to the level of the SMEs. So what we do is that if it's an SME that want to upscale, I'll talk about maybe a fruit processor or a macadamia processor or even a dairy processor. So when they want to buy bigger equipment or even to start packaging or to just upscale. So what we do is that we look at the structures that they have that I would say, maybe to be specific, what we look at is some of them don't even have bank statements. So they only maybe transact with what is famous. I mean, in Kenya, I don't know whether you're familiar with M-Pesa. So you'll find a lot of those, it's mobile banking, basically, it's mobile banking. So they do a lot of mobile transactions, and it's because they're in very remote areas. Others are just transacting in cash. So what we do is just to encourage them to keep records. We analyze the records that they have. We analyze the mobile banking platform or rather their statements, and then we extend credit to them. Then the other thing is that the banks are also not able to structure the financing according to the cash flows of these clients. So what traditionally they do is, get monthly repayments. A farmer cannot afford a monthly repayment. The same to some of the processors, they have seasons. So we structure our facilities based on the seasons, the cash flows of the farmer. So that's another key difference. And then, of course, that touches on the rigid expectations or the rigid repayments. Then what we are looking at doing is in supporting the SMEs is basically, I think, what I've gone through, and I'll not go through this. I can share this later. But this is just a picture of what activities we do, the outcomes, and the impact that it has. But I'd just like to maybe just highlight one of the cases that we've had where we've imported a dairy equipment. So a dairy company here wanted to upgrade and buy a better quality dairy equipment, because what happens is that the companies here, and I would be speaking maybe mainly to the manufacturers in the group, or companies that have equipment that they want to export to Africa. So what happens is that you will see that a lot of the equipment we have here is from the East, and it's because it's cheap. But if you really talk to these companies, they actually want a quality equipment that is lasting, and they cannot afford it. So what we do is that we try to work with the manufacturers or the suppliers. We are looking for ways that we can work with the suppliers of this equipment to make it easy for them to sell the equipment here, but also for the customers here to afford it. And that is just on the terms. We work on the terms with the manufacturer. So what happens is that there's a dairy company that had processing equipment that did not have enough capacity, and we imported for them a dairy equipment from Finland. And this happened actually in June this year. And you can see the impact that has had is that they're able now to support more smallholder farmers, more milk farmers, dairy suppliers to take up their milk. And it also happens to so many macadamia. We finance a macadamia factory, and it's the same, the impact, because again, looking at our shareholders, most of them are DFIs, and what they want mostly is impact. So we want to have not just financing, but impact is really, really key for EFKen. So we cannot finance a client unless we can demonstrate impact. So that's maybe something that I would like to say about that. I move on. So our financing is really just basic asset finance. So it could be finance leases, but we also offer operating leases. But what we've discovered is that most of the client in this region, the SMEs, don't understand operating leases, and those who understand, there has been very bad experiences of operating leases. And so we do a lot of finance leases where the customer owns the equipment or the asset at the end of the tenure. Also, it's because also our tax process doesn't really support operating leases. So as much as it's a very efficient way and a very good way of even managing the operations and also managing the books of the clients, then and taxes, they have a lot of tax benefits. But here, our tax laws are not very friendly and are not very clear when it comes to operating leases. So the clients don't get full benefit of it. And as a result, we end up doing a lot of hire purchase and finance leases. And then, so our target, our products, what we really finance is really the agriculture value chain. So that is from production level. So that's the tractors, the harvesters, anything to do with mechanization at production level. And then logistics. So this is basically transportation and storage facilities. And then there's also the manufacturing. So we have a lot of millers in our portfolio, and because and the agri-processors. And then, so our target clients are individual farmers or smallholder farmers. We have small and medium agri-processors. We have millers. In fact, the millers are, I think, the bulk of the clients that we have currently. And these millers, what I would say, and these other processors, it's not just the equipment they're looking for. So they could be looking for even efficiencies in terms of power. So we're looking at converting the power, moving them from the main grid, because the power in Kenya is quite high. So solar solutions and any other renewable energy solutions are also very key for us. Then we have, of course, the dairies, and then the other ones are the cooperatives and farmer groups. So what we do is that we find that some of this equipment is quite expensive, and individual farmers are not able to afford them. So what we encourage them is to come together and form farmer groups or form groups that have the common objective. Like if it's milk producers, they come together, or very small dairies, if they can come together and then buy a larger equipment and do co-packing for their milk, or even just form a cooperative. So we are encouraging them to do that, and we have some of them in our pipeline, and then we are able now to help them mechanize and buy bigger equipment. And of course, we have the tea and coffee growers, and as well as the processors. So I don't know whether my time is up. I'll just, if you'd allow, I'll just let maybe Kaisha just say some of the approaches that we are using with the smallholder farmers, if that's okay.
Please go ahead.
All right.
Please go ahead. Thank you.
Great. So one of the things that we also have been able to work on is basically enabling that and be able to digitalize the credit process for financing farmers in the agri space. So basically what we are doing is leveraging on technology to be able to pretty much be able to offer financing specifically targeted to the smallholder farmer or groups to enhance their access and ease of application. Again, one of the things that JudyAnne mentioned earlier was the rigid application process of applying through the traditional financing models. So what we've done so far is just also to digitalize the process where a farmer can actually be able to apply for financing remotely from where they are, or also be able to enable our team to do onboarding of the farmer through technology. And thereby what we've done, we've just had three pretty much hubs which we use. So one is that either we use the hub of the equipment suppliers who we partnered with, they're able to do the onboarding of the customers from their end, and then it's linked directly to us. So we get a customer application, able to review it. Again, directly with the circles that we work with. If they want us to finance the individual members, then the circle becomes a hub which onboards the client on our behalf. The same thing also for the processor. So we work with them essentially to facilitate getting data for these particular farmers or the groups, which then will be used in our credit application process. Additionally, because Kenya also is open for open banking, about 7 to 8 banks have that facilitation where they can actually enable us to connect directly and get bank statements to the customers. A lot of M-Pesa is used in Kenya, which is different, that you don't have to rely on mobile bank statements, but basically able to use mobile money transactions to basically be able to perform credit appraisal for the customer. Then the transactional data comes again from one of the hub, which is now the processors. So the processors can give us data for farmers who have been supplying them produce over a period of time. Then we can be able to use that data again to basically enhance our credit scoring for these particular customers, which goes back into the last phase of the data analysis, where we now augment all this data from all these particular hubs and transactional data, combine that with credit reference bureau data. IPRS data is basically just to identify the consumer, and then we come up with a credit scoring mechanism, which is tailor-made to each particular value chain. So not something that would apply in the rice value chain, would apply in the milk value chain. All of them have to be customized based on the sector, sector value chain, and who's actually borrowing across the value chain. This is the processor, individual farmer, cooperative, or someone in the logistics space within a particular value chain. So we would customize that. So that's how we basically also enhancing access and reach to be able to cover bigger ground across Kenya, as opposed to say having a branch-based model where we have offices in all the locations across Kenya.
Yeah, I think that's all. I'd be happy to answer any questions if there are any, or emphasize or clarify anything. Thank you.
Thank you so much to both of you. Very inspirational, and I think it seems like a very promising platform that you have created. So congratulations on that part. I'll open the floor and for questions. Perhaps I see for starters here we got Mr. Henrik with us. So word over to you, Henrik.
Thank you very much. JudyAnne, how are you?
Fine, thank you. Good to see you, Henrik. Thank you.
What I was wondering is the time. If you finance and lease, do you have a minimum time, 10 or 12 months for equipment, or up to 36 months, 48 months?
Yeah, so thank you for that. Yes, we do. So we, again, it all depends on the type of the equipment, on the type of the client. Yeah, basically that's what matters. So we are quite flexible. What I would say is that we are not regulated. We are not a regulated entity. In Kenya, unlike Tanzania, we are not a regulated entity. So we are able to be very, very flexible and able to address whatever the client's need is. So if it's an expensive equipment, then we are able to extend it to probably 4 years. If it's an equipment that we see the customer's cash flows they can afford to pay within a short time, then we structure it according to the cash flows. So really we look at the cash flows, because we also want the clients to be able to pay off the equipment as soon as possible and also get a return on investment also more quickly. Thank you.
Okay, thank you.
Thank you. And I see you all got the sense of how we're doing it. So please raise your hand if you've got questions or comments or so. We got 2 raised hands. Allow me to pass on the word to you, Helene.
Thank you very much. I think this is super exciting, and I'm sure a lot of people benefited from this. Can you just share a little bit, how do farmers get in contact with you as an institution based in Mauritius? Because in my experience, often farmers who are really in the very rural area, they are the ones who struggle to meet the financiers. And the other one is then who takes care of repairs, and is there a way to sort of be on a permanent lease base so that as a farmer you get updated equipment? I know it was 3 questions, but I hope it's okay.
All right. Thank you very much for that. So in terms of location, sorry, maybe we didn't clarify that the group is the one that's based in Mauritius, but EFKen is here in Kenya. So we are actually on the ground, and we go and visit the farmers directly. We visit them, and how we reach out to them also is directly. I mean, first of all, is using this equipment suppliers, because if a farmer wants maybe a dairy processing plant, they will go to a manufacturer that they know. or if a farmer wants a tractor, they will go to New Holland. So we work a lot with the suppliers of the various equipment. We have partnerships. And then the other way is also using associations that are there for farmers, like Cereal Growers Association. We have East African Grain Council. We have different associations that we target to be able to reach the farmers, and also to reach not just the farmers, also to the, like the millers, the dairy companies, the cooperatives. So we target them through those forums. And we also have groups like AGRA that keeps inviting us to some of their forums to talk, and also they also refer a lot of their clients to us. Then you ask about the maintenance, and it's very good that you raised that point. Thank you very much. And this is something that is really key for us to be able to support any manufacturer that is supplying equipment here, and it's very key for us. So what we do is that when we are financing, then we need support from the EOM or from the OEM, what they call it, equipment manufacturer, or from the dealer. So we need support, after sales support. It's really important. So what we do is that we finance including the service, especially if it's a specialized equipment. So what we need is that if it's something that we are importing, it's not in the country, then we'll need a commitment from the supplier that the payment, in terms of even the phasing out of the payment, just to give the farmer some, or the importer, the customer, some good space of some good way of making the repayments. For example, when we're importing the dairy equipment, it took about 6 months for us to bring it in. So what we needed is to come up with a payment arrangement. So it was a letter of credit, then to a certain level, and then upon installation and commissioning, then we paid the final amount. And it will be from the tier 1 bank in Kenya, the letter of credit. And then what happens is that we also need a commitment of either a warranty or a commitment that there will be training. Training will have to be done. And then there will be support in terms of service. So we have a service schedule, and we finance the client in advance, such that when it comes to time for service, then we'll get that support from the manufacturer. Thank you.
Sorry, Judy, perhaps you could just be very clear on this, because I know that would be important to a number of our company members. So what do you expect from, if you're procuring equipment from Denmark, that would be the service and also the credit line? So how do you, what are the criteria for the companies that you're working with? Could you be clear on that?
Okay, because let's say we're importing an equipment from Denmark. So what we do is that it also depends on how long that equipment, it will take for that equipment to be here, to be manufactured and to come here. So if it's going to take, for example, again, 6 months, maybe 3 months to manufacture, 1 month to ship, another month to install. So we phase out the payment that way. So we can do a site LC for like 80% of the amount. So when we put a down payment for the manufacturing to be done, an LC or a prepayment for the manufacturing to start, and then upon shipment, then we pay a certain portion, and then once upon installation, then we pay the last portion. And this is all backed by a letter of credit. So that's the support that we require, because what happens is that if we make the full payment, then the client will also start paying. Even if we give them a grace period, we can't give them a grace period on interest. So they are already paying interest, and the equipment is not working. So that's why we require also support from the exporters, because you are assured, having a letter of credit, then you are sure that you get your payment. So we just agree on how much advance is required. Okay. Yes.
So that being the one in terms of the credit and the way how to organize that. And then you got the expectation also in terms of the service, and of course maintenance is also an expectation to the provider.
Yes, and that is especially for specialized equipment. So we require local support. If there's no local presence, then we need the supplier to indicate how that equipment is going to be serviced, how they are able to support servicing of that equipment. The parts going to be available in case of, especially if there are any consumables that are required, then we need to know how they'll be supplied, and if they can be supplied in advance, and then we finance them in advance. So we really like a lot of conversations with the manufacturer, and also a good partnership. That's what I would say, a very good partnership for us to be able to support the equipment coming especially from outside.
Okay, thank you. And sorry for jumping in. Django Asando, please, a question from your side.
Yes, thank you so much. My question is a short one. I'm sure you spoke with her in Nairobi already, but then for us in Uganda, I didn't hear anything regarding Uganda. Do your services come up to Uganda? And if so, we really need it because we think there's need and demand for your services. So if you could clarify on that, it will be very nice to know.
Okay, I think I'll leave that. We've had that question a lot from Uganda. I'll leave it to Kaisha, that group.
Okay, yeah, so I think, yes, definitely Uganda is in our plans for expansion. As I mentioned, we have a phased approach towards the growth of the group across East Africa. So the mentioned now is Kenya, Tanzania, and the next country aligned for next year is Zambia. However, for Uganda, for now, the only match we can do for us, we also are able to finance directly from Mauritius for projects that, however, they need a value of at least $1 million and above for us to direct financing from Mauritius, for example, to Uganda. So that will be possible through our licensing in Mauritius, which will be direct financing. But again, the ticket size then has to be a bit high for us to do that. But in essence, in terms of our expansion plans for the group, yes, Uganda is part of that aligned expansion. However, I cannot be able to give you a specific timeline for now. So what I would say is if there's an opportunity for financing, the ticket size is at least $1 million, you should be able to look at it and do direct financing from Mauritius.
Okay, thank you. And just the sound is not so good. Sorry, Kaisha. So the limited amount that you're looking for, we have to go beyond a certain level, and that was how much? Sorry.
$1 million.
$1 million. Okay.
Yes.
Thank you. Okay, and then I see Ole from Aqua is raised his hand. Thank you.
Yes, thank you. I have a lot of questions, but I'll just have one today. Do you work inside aquaculture? Aquaculture meaning equipment for, we talk hatcheries, we talk ice machines sold into the farmers in Kenya in the aquaculture business. Because if you're working in this, now I'd like to set up an individual meeting.
Yeah, I think I'll let Kaisha to comment on that. But actually, one of our shareholders has invested in that a lot at DevCo. But maybe you can just talk about it.
Yes, I think as JudyAnne has mentioned, we are able to finance the aquaculture space. Again, looking at who we finance, SMEs, individuals, or you're financing who within the process. Is it you want to finance someone for the cages, the cold rooms, the processing units? If they're looking at both export market for the fish or for whichever produce, or so where exactly is the financing need required at that point in time? So then we're able to understand who would be able to do it. Again, as I mentioned, DevCo has already financed layers in the lake zone within the aquaculture space. So again, we do have some precedents in terms of experience in financing that in the market in Kenya, which we can leverage.
Thank you.
Yeah.
You just, I think we'll set up a meeting individually afterwards another day. But just for your information, it's mainly they need what we call hatcheries in Kenya in general around the lake to have good small fingerlings, what they call them, to grow fish. And they need ice machines in container solutions with solar panels to cool down the fish or keep them cool until they go to the market. And we have solutions for that. And we have farmers who want to invest in this. But I'll come back to an individual meeting afterwards. Thank you very much.
Thank you.
Thank you.
Thank you. Then please let us going with the raised hands and questions. I see there's also a question, as you can see in the chat. It's from Mogens Knudsen that has been working for a number of years also, both with bricketeering and other equipment, especially in Africa. So let me just read it out loud. He's in a train, so he's not able to join in verbally. So there's a few questions, but I think we'll go by one. So first question, as you can see, do you lease equipment that is not regarded as standard? Secondly, what is the typical investment level? And if you not accept not standard equipment, will a buyback guarantee help so that the supplier of the equipment takes part of the risk? And then the fourth question coming into that, and probably also, JudyAnne, you can see it in the chat. If the customer does not fulfill payment, can you arrange to take equipment back? So a number of questions on the very operational side, but I think it's key that we actually understand these the daily hands-on practices. So please, if you could enlighten us on these questions.
Okay, thank you. Yes, we do. It's okay. I don't know how to put it. Yeah, we could, but we actually do not prefer specialized equipment. But when we had to lease a specialized equipment, I think he was already answered the question, which is that would require a buyback guarantee. And we've done that for some equipment where we've got buyback guarantee from the suppliers. And one of them, maybe just to mention, is the supplier here of Liebherr. I'm sorry if I'm not pronouncing it well. It's a German equipment manufacturer for it's for an excavator, some of the specialized and expensive equipment. So yes, we do come to those arrangements, and it helps us also to finance the buyers that want to be financed for that equipment. Yes, we can do that. In terms of our interest rate, I don't know that you meant if it's an interest rate, so we finance both in dollar and shilling. So if it's in dollars, it's between 10, 11, 9. It depends on the profile of the client and also the type of the equipment. So, but that's the range. And in the shillings, because our money comes in foreign currency, we are slightly higher. So we are higher than the banks, but we are lower than most of actually all the microfinance institutions in Kenya. So our pricing ranges from 20 to 25%, again, depending on the profile of the client. So if, I'm just looking at the last one, is when the client is unable to pay, that is primary security. So if the client is unable to pay, then we collect the equipment. But what I would just like to say is that the difference with us is that collection of the equipment is really the last resort. What we do is we work with these clients very closely so that when they are experiencing hard times, then we are able maybe to give them breaks. Yeah, we are able to give, and we've done that. Like in Kenya, what we've had this year has been very tough because of the elections, because of the drought. So we've had clients that we've given breaks because they really cannot pay during those moments. So I would say, yes, we take back the equipment, but that's really the last resort. Yeah.
But a bit perhaps following to that, in terms of if it's not standard equipment, I mean, of course, with a payback guarantee, that being one option. But what I often see is that in a number of cases, you have to test out, verify new solutions and so. So how do you do due diligence in terms of the equipment that you procure and also the suppliers? I mean, do you have any ratings, or does it has to be equipment that's been in operation for 5 years or 2 years, or and so do you have any criteria for the individual companies from which you want to procure?
Yes, so we do the due diligence of the equipment and so especially of the supplier. We do quite some detailed due diligence. So we can take in new suppliers. We just need to have reviews of the equipment. But some of the questions we ask is how much has been supplied to this region, and probably the after-sale support, which is usually very key, and whether there's warranty. So the warranty is usually very important when you're financing, especially the specialized equipment. Yeah, so we do that. We have the privilege of having a board that is spread across, I mean, especially in Europe. So they're able to actually do that due diligence for us, some of our directors.
Okay. I'm just trying to position you, so to speak, in the financing line. But what I understand here is also that you would actually need to see a demonstration plant up and running as a minimum in let's say, Kenya, Uganda, Tanzania, similar countries.
Yes.
So you're not just picking equipment already being used in Europe, you also want to see it in operation before entering into a partnership.
Yes, that would be good. If it's a new one, it becomes very difficult, and then we tighten the rules, and we also require a very large down payment because we don't finance 100%. Sorry, I didn't mention that. So we finance at minimum 70%. But for specialized equipment, we end up financing about 60%. So we require the client to contribute the rest. Yeah,
Okay.
and then in terms of how, I don't know whether you meant how we do the due diligence for the clients or you meant for the supplier, the one that I've answered.
That was actually for the supplier. But, okay. Thank you. Thomas, a question from your side?
Yes, my question, when you talked about the cash flows, I thought it was interesting that you restructure your repayments according to farming or production cycles. You also mentioned that the client can get a grace period. How long time is that grace period usually?
The grace period is usually dependent on how long it's going to take for the equipment to be installed. So it's all different, but our standard grace period is between a month and 2 months, but we've given 6 months. So it all depends on how long the equipment will take for the equipment to start running, because we don't charge the client anything above interest if the equipment has not started operating, because that's what most likely they're going to use to pay us back.
Okay, so it's until the point of installment, but you also said that you structure it according to production cycles. So let's say you invest in aquaculture. Would you be able to give a grace period until the first harvest is in hand?
Yes, but the grace period only for the principal. But for interest, the client will keep paying the interest, and then principal kicks in when the harvest happens. And maybe just also to give another example is for the farmers who do maybe just two seasons in a year. So we are also able to just structure repayments for 2 years, twice a year, as opposed to or quarterly. It all depends on on when they receive the money.
Okay.
Yeah, we even have one who pays once a year. So if it's the season is just once. Yeah.
Okay. Thank you.
Okay. I see there's another question coming in the chat from Ole asking, how's due diligence of customers made?
Okay, so that we are very thorough in how we do the due diligence, and it's not on the requirements, but just to ascertain that these clients are able to pay back. So we just have a list of requirements specific to the profile of the client again. So if it's a small company, there's a list of requirements. If it's a cooperative, so we do due diligence dependent on the nature of the client. And this is mainly on just the documentation and client visits. We always have to visit these clients and also get reference from either their suppliers or their off-takers. So we do a detail, but what I would say is that I think the due diligence mostly we do is just to know the credibility and also the credibility of the client, because what happens is in Kenya and in many parts of Africa, we don't have good structures of managing defaults. Like it is in the developed world. So here you just have to look at the character of the client. So our due diligence is really mainly based on the character of the client. So you can be having very bad records, but we still finance you if we see that your character is correct.
Okay, thank you. Now, JudyAnne, it's a bit of a bombardment with questions, and I think we are soon to close. If nobody else, I got one final one. I just need to clarify. You mentioned that you can do it down. You take 70% of the loan, and there's expected a down payment from the customers, which up to the 30%. Is that true?
Yes, that's for the most actually. There's sometimes we go down to 20, but again, that must be like a track, something that is very common and has a very high resale value. So I would say for specialists, for equipment, it's between 30% contribution to 40% contribution.
Okay.
Yes.
So I'm not a financing specialist, but I sense it's a bit the same challenge also if you were entering with a bank, that they are also asking for a fair bit of down payment from the customer, and also having guarantee in the equipment. So please kindly, could you just outline what is the big difference then to what you're providing and to what you would get from the banks? Because it's not crystal clear to me, sorry.
Okay, so for us, again, our target is not, our aim is not to compete with the banks. So if a client is able to easily get financing, so they have all that is required, like collateral, they are big clients, so we want them to go to the bank. So ours is actually just to help the ones who are very good clients, but because of the challenges that I mentioned earlier, like collateral challenges, then they are not able to get financing. But we actually have a lot of big clients who could be funded by banks in our portfolio. And I just want to mention that just in case one is found. And yeah, and the reason we do that again is we get a lot of questions and a lot of inquiries from those clients, also because of our flexibility, because banks again are regulated, they hold the client's deposits. So there's only so much they can do in places where the conditions are tough. So that's one of them. But again, the main reason actually we finance a corporate, because we have a few in our books, is when we have a corporate that has a network of, let's say, outgrowers. So they'll give us, by financing them, and a specific example that I think I had given you, and Thomas, is like the macadamia. We have a macadamia factory that we finance. That's a very large company, but they have a lot of outgrowers. So we are able to reach the outgrowers and finance them for tractors within that network. And because of them, then, because of check-off arrangements, we are guarantees that these outgrowers will be paid. Then we are able to finance even those who don't have good bank records.
Okay.
Thank you. Yeah.
Thank you so much, JudyAnne. Time is running fast, and I think there's also appetite for follow-up calls from a few of our members here. So again, thank you so much for taking your time. It's really been an honor having you on board, and very much to the point that we like, and being very crystal clear on the opportunities at hand. Thank you so much. Also, thank you to the audience. We will, of course, continue with these A2i talks in the coming months. We're just about to clarify the next presentation, but stay tuned, and we'll continue, hopefully, the conversation also with JudyAnne here following. So to all of you, when you get to it, enjoy the weekend, and all the best to you. Thank you so much for now.
Thank you. Thank you for having us.
Thank you.